So the session is now getting recorded. So again, a very good evening to all of you. So what I was trying to tell is we will be covering the chapters not in a very fast manner, neither in a very slow manner, but we will ensure that all the topics are getting covered actually. Clear? So you have to stay with me, be patient with me. One thing that will be assured to you is you will understand all the concepts and you will feel confident about it actually. When we discuss accounting equation, you will get to know you will get to know what accounts is and what is debit, what is credit little bit. And once we go into this chapter journal, chapter number 8, from there onwards, your foundation will get becoming stronger actually. Okay. So from then onwards, your foundation will start getting stronger. Chapter 8 is the main. In fact, accounting equation also I will start giving concepts to you with respect to debit and credit. So let us move forward. So in the last class, we were discussing about theory base of accounting. Hope all of you got time to look into the chapter. Anyone who did not look at the chapter? Everyone had a look at the book, guys? You got your book, Sanjana, now?
Yes, sir, I got the book.
Okay, good. Anyone not having? One more guy was not having the book, actually. I forgot the name. Everyone is having the book now? Okay, good.
Yes, sir.
Okay. So let's get into the discussion now. We will start with a quick recap of what we discussed in the last class. Then we will move to the current topic. Clear? So we were discussing chapter number 3, theory base of accounting. I will quickly ask each one of you to, what are the 3 fundamental accounting assumptions, guys? Quickly.
Going consistency.
Sir, going concern, consistency, and accrual.
Okay. Each one of you, one by one, can answer. Can someone answer what is a going concern? One by
Sir,
one.
shall I answer?
Okay, you go ahead first.
Sir, going concern concept, it is a assumption that a business continue to carry out its operation to a number of years.
Okay, fine. Business will be operating indefinitely, in short. Okay, that is the meaning of going concern. The next one is consistency. Yes, Aditya.
Sir, consistency in simple terms is that business should be consistent.
Okay, that is a English translation, but what does it mean?
We should sell or take goods in consistent way. Like we should not take a break.
That is not exactly what it means actually. Yeah, Dhania, you want to go ahead?
So the consistency assumption states that the accounting principles and practices that is adopted during the first year should be followed for accounting every year to make sure that the data is comparable.
Fantastic answer. So very spot on. Consistency means once we adopt an accounting principle, we have to ensure that we follow the same principles year on year. The reason is only if we follow accounting principles consistently, our financial results of current year will become comparable to the previous year. Okay, so there has to be a consistency in our approach of adopting accounting principles. Very rightly worded, and this is exactly what was required when we talk about consistency. Aditya, you're clear now? We need to follow the accounting principle year on year consistently so that whatever results that we are publishing, P&L account, balance sheet, or cash flow, it is in line with the previous years so that it becomes comparable. Clear? Any doubt? The third one is accrual. Very important concept. This concept is going to stay with you forever. In fact, all the 3 are going to stay with you forever. But accrual is something which we use even today on a daily basis. We don't use going concern on a daily basis because we know that business is going concern. Consistency, it is assumed that we'll be following accounting principles consistently. But accrual is a term which we use on a daily basis. What do you mean by accrual? Anyone? Yes, Dania, go ahead.
So the accrual assumption states that the transactions are recorded as and when they occur, whether the amount is exchanged or not.
Okay. Can you explain with an example? It was very bookish.
So, for example, if the outstanding expense that has not been, if the service has been received and the amount has not been paid it, is still considered an expense for the business just because it is not pay in that accounting in that particular time does not mean it is not an expense, and it is still recorded as an expense, and that amount has to be paid in the future.
Okay. That was a better explanation. In fact, the first explanation was also correct. Okay, but let's understand it practically. When we talk about accrual, in an accounting year, there are 12 months, right? So whatever income and expenses that we have, if we have employees for 12 months, that means my P&L should show salary for 12 months. If I have taken a premises on rent for 12 months, that means my profit and loss account should show the rent for 12 months. Even if I pay for 11 months only, since I use the premises for 12 months, I have to show the expense for 12 months. Clear? 11 months will be actual rent paid. 1 month will be outstanding expenses. When I add both, my expenses will become 12 months. My P&L account, profit and loss account will show expenses for 12 months. That means once I have enjoyed a service or once I have utilized a service, that means I have to record that particular expense in that same financial year. Clear? So it doesn't matter if the expense is paid or not. When we follow the accrual concept, the period in which the expenses belong or the period in which the income belongs, it has to be recorded in the same period. If I make a sales in the month of March, credit sales, even though I do not receive the payment within the month of March, still the sales will belong to the month of March. Clear? Because I have either handed over my goods or I have rendered some services. The moment I render services or hand over the goods, I can record that income in the period in which the sale of service or rendering of services or sale of goods has taken place. Clear? Any doubt? Apart from this, we discussed about any doubt in going concern, consistency and accrual? No. Apart from this, we discussed about accounting entity. Business and owner both are separate. That is called accounting entity. Money measurement concept, only anything which is denominated in terms of money can only be measured. Clear? Then accounting period. Accounting period is nothing but a period of 12 months. For India, it is April to March. For US, it is Jan to December. Both are accounting period. Clear? But whenever we talk, we will talk only about financial year. We will not talk about Jan to December. Clear? Because we are in India, we follow financial year. Full disclosure. Disclose everything what is possible. In short, do not hide anything which will misrepresent the accounts actually. Clear? Materiality. Materiality is something, if we misstatement, if a particular misstatement leads to wrong interpretation of financial statement, that is called as materiality. Sorry guys, someone was at my door, so I had to go. Okay. So we're discussing about materiality. Materiality is something, if a proper information, if an accounting information, if it is not disclosed correctly, that means it will lead to a wrong decision from the user of the financial statement. So something becomes material if the disclosure of it may lead to a wrong decision. Clear? So in short, I was giving an example of for Infosys, a 500 rupees item or a 1000 rupees item will not make much difference. But for a small company, even a 10,000 rupees item may be material actually. So it is more on what is important and what is relevant, that concept actually. Then we discussed about prudence or conservatism. That is again one very important concept. Can anyone explain what is prudence or conservatism? Very important concept, guys. Yeah, go ahead.
The prudence or conservatism principle, expected expenses and losses are provided, but do not account expected income and losses.
Okay, we should not read. We should not read from the book. You should be there registered in your mind.
Oh.
Okay. So what does it mean? It means we have to provide for all anticipated losses, but we cannot record any anticipated gain. I gave an example. Can someone recall the example that I gave? Anyone who can recall the example that I gave? Anticipated losses. I quote a lot of examples, guys, for you to remember. Can anyone tell the example which I quoted in the last class?
Sir, a person bought a 1 lakh loan from me. He gave the 90,000, but he didn't give the 10,000. And I know that he will never give the 10,000, which become the bad
Okay.
debts.
Okay, that is correct actually. What she told. Instead of loan, let us convert that into a sale. We made a sale of 1 lakh, but both are correct. Your concept is also correct. When we made a sale of 1 lakh, we were not able to recover 10,000. So that 10,000 that we are not able to recover, it's an expense. We call it as bad debts. So record all anticipated losses. For anticipated gain, I gave an example. There is an insurance claim which we have filed, but we are not. Today, I am not sure whether I will get the claim or not. I filed a claim for 1 lakh. Can I record that as income today? I cannot record. I can only record when it actually comes into my bank account. Clear? So I cannot record an anticipated gain, but I can record an anticipated loss. Clear? Then we discussed about historical cost. Again, I gave one example. Anyone can recall that example? Historical cost example.
Sir, you said that you gave an example that you bought a laptop in 2020 for 1 lakh. In 2026, it costs 1.5 lakh, but the book value of that laptop is still going to be 1 lakh, not 1.5.
Absolutely spot on. Okay. So this example, why I am trying to give is so that it gets registered in your mind. Okay, now you will not forget this example. So whatever price that I paid during 2020, that is historical cost, that only will be appearing in my books of accounts. Clear? Not the current market value. Fantastic. Then we discussed out matching concept. Anyone can explain what is matching concept?
Sir, shall I?
Yes.
Sir, matching principle means the expenses occurred in the accounting period should be matched with the revenue earned in the same accounting period.
Spot on, actually. This again is perfect definition of matching concept. If we are recording the income for 12 months, we have to show the expenses also for 12 months. It cannot be, income cannot be for 13 months. Expenses cannot be for 12 months, or it cannot be vice versa. Expenses for 13 months, income for 12 months, that is not possible. Clear? That is called as matching concept. Perfect, guys. Dual aspect, everyone knows every transaction has a debit and credit. Okay, so this is where we stopped. Then we discussed about verifiable objective and revenue recognition also. Okay, verifiable objective means transaction has to be evidenced through a document. That is called as verifiable objective. Means I can only record a transaction which has happened, right? How do I know that this transaction has happened? Only when I can verify that transaction. How I can verify the transaction? Either through an invoice, either through a voucher, either through a cash memo or receipt. Something should be there to evidence the transaction. Clear? That is called as verifiable objective. Revenue recognition. Whenever a sale of goods or rendering of services takes place, I gave an example for revenue recognition. What was the example?
Sir, shall I answer?
Yeah, please.
Sir, if AC technician came to install a AC and
Yeah.
after installation, he has the right to receive the money.
Fantastic, actually. I'm very happy with the way you have followed the examples. All of you guys, are you able to recall this example?
Yes, sir.
Only Sajana is telling she's able to recollect and quote the examples back. What about all of you guys? Okay. Now you are recollecting. AC technician has come. He has installed the AC. So at what time revenue can be recognized? Only after installation. The moment I make a call, he cannot recognize the revenue. He can only recognize the revenue after completion of service. Clear? Any doubt? So this is where we stopped last class. This covers my entire chapter. In fact, 80% of the chapter it covers. The remaining all are very high level understanding, which you need not have a detailed understanding. Actually, it is called accounting standards, a very, very technical concept. It is, as I told in the last class, it is a CA inter-level concept. So you're not expected to remember that. Okay, so I will just walk you through at a very, very high level what it is. Okay, and my chapter is complete. Then we will move to the MCQs. We'll finish the MCQs quickly, and then we'll move to the next chapter. Clear? MCQs you are going to answer. None of the MCQs I will be answering. Wherever you are stuck, that MCQ only I will be taking it up. Clear? Because I know that each one of you can answer the MCQs. Okay, let me start sharing the screen now. Okay, can you see my screen, guys?
Yes, sir.
Yes, sir. Yes, sir.
Okay. Now we discussed all this thing: revenue recognition, verifiable objective. The next one is accounting standard. What is an accounting standard, guys? Accounting standards are certain guidelines prescribed by the Institute of Chartered Accountants of India, who is the supreme body of accountancy in India. They prescribe accounting standards. Why they prescribe accounting standards? Because there are certain transactions which requires clarity. Like in case of a fixed assets, what is a fixed asset? It is given in the accounting standard. At what cost a fixed asset has to be recorded? It is given in the accounting standard. When I can recognize a fixed asset, it is given in the accounting standards. So there are certain specific nature of transaction which requires a certain guidance. So accounting standards are principle which gives you guidance to record specific transactions. So we have an accounting standards on property, plant and equipment. We call it as fixed assets. We have an accounting standard on intangible assets. We have an accounting standard on inventory. We have an accounting standard on someone who deals in multiple currencies. We have an accounting standards on foreign currencies. We have an accounting standard on discontinuing operations. So there are a lot of accounting standards which are given actually. Okay. So accounting standards are, so why these accounting standards? This accounting standards. Okay. So this accounting standards prescribes guidelines so that every company who follows this accounting standard, they will be using the same treatment for doing a particular transaction. There will not be a different treatment which will be given by different persons. Clear? Like if you play a sport, there is a rule, right? Everyone has to follow the same rule. You cannot follow a different rule when you play football. You cannot follow a different rule when you play cricket. For everyone, the rule is the same. For team A, team B, everyone, the rule is the same. Clear? So like that, for any company who is following accounting standards, for them, the rules to account a particular transaction is the same. Clear? So to formulate Just 1 second, guys. Let me, pencil. I was looking for this pencil. Okay. To formulate and publish, this helps in presentation of financial statement, and they are worldwide accepted. They are worldwide accepted. To work for the improvement and harmonization of, so it helps in presentation of financial transaction. I told you, right? Every company will follow the same rules. So the accounting will become standardized. We cannot follow a different approach when we follow an accounting standard. Clear? Okay. See, there are, previously it was accounting standard. Now we call it as Ind AS. Ind AS is Indian accounting standards. Ind AS is Indian accounting standards. Okay. For which are the companies it is applicable? For listed companies. For listed companies, Ind AS is mandatory. I work for a listed company. So for it is applicable for a listed company. It is applicable for companies having net worth of 250 crores or above, and holding an subsidiary and associate companies. This is not relevant at this moment, actually. Okay, what is a holding subsidiary associate company? It's a very high level understanding, not relevant at this point. Okay. So accounting standards, there are close to 30 accounting standards. Like there is an accounting standard on disclosure of accounting policies. There is an accounting standard of valuation of inventory, cash flow statement. Okay, there are around 29 accounting standard, guys. 29 accounting standard. Intangible assets I just spoke. We have this is property, plant and equipment. This is nothing but fixed assets. On revenue, there is an accounting standard. I was telling in the last class that revenue recognition is discussed in just 2 or 3 lines. But when we go to that accounting standard, it is discussed in more than 100 pages. Okay, very, very interesting. And I am someone who specializes or who likes accounting standards, actually. When I take classes for CA Inter, that is the area of interest for me, actually. It's wonderful, actually. Each accounting standards will give you so much of insights about how a particular transaction has to be recorded. Okay, for you, just remember AS means accounting standards. Now it has been replaced by Ind AS. Ind AS is nothing but Indian accounting standards. Indian accounting standards. We have a equivalent. We have an equivalent of Ind AS at an international level. We call it as International Financial Reporting Standards. It is called as IFRS. IFRS is also given somewhere. We have an equivalent of Ind AS. It is called as IFRS. Okay, International Financial Reporting Standards. Now, India did not adopt IFRS, but they have copied 95% of the IFRS. They have copied, but named it differently as Ind AS. So whatever we do accounting treatment, the same treatment is done by UK, which follows a International Financial Reporting Standard. Dubai also follows an International Financial Reporting Standard. Similarly, Singapore, they follow Singapore Financial Reporting Standards. US, they have told that we will not follow IFRS. They follow US GAAP. US alone is following US GAAP. Many of the countries, they have aligned themselves to Singapore International Financial Reporting Standard. In India, it's almost similar to International Financial Reporting Standard, but we call it as Ind AS, Indian Accounting Standards. But they have copied everything from IFRS. Clear? Any doubt? Okay. So what is the nature of accounting? What is the meaning, guys? It is generally accepted accounting principles that are followed for preparation and presentation of financial statement. How revenue has to be recognized, how asset has to be capitalized, when asset has to be capitalized, when revenue has to be recognized, what to do in case of service, what to do in case of goods. So there are multiple things that are discussed in these accounting standards. Okay. So accounting standards, what is the nature? They provide guidelines for preparation of financial statement. Objective of the accounting standard is to bring uniformity. When all the countries, they follow accounting standards, UK is following, Dubai is following International Financial Reporting Standard, India is following Ind AS, almost everything is same. So when I take a UK financials or an India financials, it will look same. It will look almost similar. So anyone reading an Indian financial statement or UK financial statement, they can make sense out of it. Clear? So it brings uniformity. Okay. Objective is to minimize. See, if we don't have accounting standards, Reliance will follow different accounting standard. Reliance will follow different method. Tata will follow different method. Infosys will follow different method. Then all these financial statements are not comparable anymore. Clear? But when all the three are following accounting standards, all the three financial statements becomes comparable. Clear, guys? That is the objective of this accounting standard. Facilitates meaningful comparison and enhancing reliability. When we follow an international level standard, it makes the financial statement more reliable, better presentation and understanding. These are the objectives. Okay. Objective limitations and all you can think. There is one difference between Ind AS and this one. Where is that difference? Okay. See, somewhere it was given that Ind AS is principle based, accounting standard is rule based. Actually, that was one of the MCQs also that we have. Okay. So this is in short about accounting standards. Just remember what is an accounting standard. These are principal guidelines to bring uniformity, to ensure comparability and all those things. That level of understanding is enough. I don't want to go deep into accounting standards. Okay. Now, let us discuss. This is a very interesting problem. Okay, we will recap all the accounting principles that we have understood. The first one is production manager is interested in recording good industrial relation in the books of accounts. Can he do that, guys? Good industrial relations, can he record?
No, sir.
Why? Which accounting principle is violated? Which accounting principle restrict you to record this? Money measurement principle.
The transaction
Money
recorded
measurement
should have
concept.
monetary value.
Money measurement, there is a principle called money measurement which allows you to record only transactions which can be measured in terms of money. Clear? Second one, long-term success of the company is doubtful due to market competition. Long-term success is
Going
doubtful.
concern.
Going concern. We have to believe that the company will be there forever. Even if it is doubtful that it may not be profitable tomorrow, we don't have to worry. We have to record the transaction thinking that it is a going concern. Okay, which accounting principle is this? Going concern. Although sales have not yet taken place, few reliable customers of the company have placed large order, which huge profit is expected. Large
Sir,
orders,
revenue recognition.
yeah, large orders have been placed by the customer. Can I record revenue? Only orders have come. Have I given the service? I have not given the service. I have received an order. I have called the technician, but installation has not happened. So revenue cannot be recognized. So order have come, but delivery or rendering of service has not happened. So revenue cannot be recognized. Clear? One of the shareholders of the company has invested his savings in shares of another company. Okay, this is, I am the owner. I am investing in some other company. So whatever owner does is not important. Whatever business does is important.
Business entity concept.
Business entity concept. Clear? Whatever owner does in his personal capacity, business is not interested in that. We are only concerned about what a business does. Clear? So this is the transaction of the owner. This is not the transaction of the business. Clear? Okay. At present, market value, at the end of the accounting period, factory rent of the company is outstanding. Factory rent is outstanding for 10,000. Should I record it as rent or should I forget it?
Accrual concept.
Accrual concept. Clear? accrual concept. Even if rent is outstanding, still it is an expense for the business. Clear? Next one. During the year, at present, the market value of the fixed asset of the company is very high. Market value is high, book value is lower. My example of 2020, I purchased laptop for 1 lakh. Now it has become 1.5 lakhs. Which accounting concept?
Historical cost concept.
Sorry?
Historical cost concept.
Historical cost concepts. Okay. I have almost at full strength now. 18 students have joined. I think only one is missing. Fantastic. Good to see everyone. But many are coming late in the class, guys. 6:55 means you have to be at 6:55. From the next class onwards, maybe I will stop entry after 7:05 or maybe after 7 also. Clear? Because I'm someone who likes being on time. When I can be here at 6:55, I was working till 6:50, you won't believe. 6:55, I am in the class. Okay, so when I can do that along with my work, you also have to be present on time, guys. Clear? Next thing, during the year, the company purchased pencils of ₹50. This all has been issued from stock and we're still in the use at the end of the year. 50 rupees of pencil, whether it is material or immaterial.
Immaterial.
Immaterial doesn't mean that we should not record. They just wanted to highlight, even see every transaction, whether it is 1 rupee or 50 paisa or 25 paisa, if we incur even single rupee, we have to record in the business. But not recording this transaction, if by mistake I forgot to record a 50 rupees of pencil, it will not mislead anyone. It will not mislead anyone. What I'm trying to tell is, it is not material enough to mislead anyone. Clear? If I forget to record 10 lakh of computers, it may mislead someone. But if I forget to record 50 rupees of pencil, it may not mislead someone. So here they are trying to portray materiality concept here. Clear? Directors are interested to adopt return on value. Last year they had straight line method of depreciation. In depreciation, there are two methods: return on value and straight line method. The directors want to change. Can they change?
Consistency principle.
Consistency principle does not allow you to change, but in accounting standard, there are few occasions which allows you to change actually. Whenever we discuss about accounting standard or whenever you go to CA Inter, that time you will get to know on what occasions a principle, if you want to go from return on value to straight line, when it can be changed, that is given in accounting standard. But the basic rule is it should not be changed year on year. Clear? Clear, guys? A debtor who owes an amount to the company is likely to be declared insolvent. If the debtor is he purchased 1 lakh rupees of goods from me, he is becoming insolvent. What I shall do? Unmute yourself, please. What I shall do?
Sir, prudence concept.
Prudence concept. What I shall do? I have to record this loss, right? Anticipate all losses, but do not anticipate any gain. 1 lakh rupees I have to show as bad debt in my books of accounts. Clear? Clear, guys? Okay. So you were able to relate with each one of this? Clear? Let's move to MCQs now, guys. See, I was talking about international financial reporting standard. Like in India, we have Institute of Chartered Accountants of India who gives this accounting standards or Ind AS. There is something called International Accounting Standard Boards who gives IFRS, International Financial Reporting Standard. Which is the accounting body? It's an international accounting body. Like those who follow cricket, there is called International Cricket Council is there. This is BCCI is there. So BCCI will only regulate the cricket matches of India, but ICC will regulate the cricket matches of all the international playing countries. So similarly, IASB is International Financial Reporting Standard. They govern international financial reporting standards. Okay. See, all these are not relevant, or you can just go through it. Okay. Now let us come to MCQs. See, accounting standard, just go through it, guys. Just go through it once. No need to remember anything. No need to by heart anything. Just you can read once and leave it. That is the level of understanding that is required for 11th standard. Clear? Now let us come to the MCQs, guys. Whatever we discussed so far, again, you guys will be able to answer each one of the MCQs now. Fundamental accounting assumption as per AS1. Which are the three fundamental accounting assumptions?
Option B, sir.
Option B.
Option B, sir.
Okay. Everyone is clear? Next one. According to the business entity concept, what does business entity concept tell you?
Sir, the transaction should be viewed from the point of view of the business.
Okay. So which option is correct?
C, sir.
Option C, sir.
C.
See.
The concept of conservatism. Remember, don't look at the answer. Remember, conservatism means record all, anticipate all losses, but don't record any
Losses.
gain. So which option is correct?
Sir, option C.
C option.
Option C is correct. According to money measurement concept, remember in your mind, what is money measurement concept?
Option B.
Sir, transaction which can be
C.
Option C.
C.
Next one, which of the following correctly describes the cost concept? Cost concept means what? Remember cost concept. What does it tell?
Sir,
What does
option
it-
A.
Assets are shown in the books at the price at which it was purchased plus cost of improvement minus depreciation. This is correct. Assets are shown in the book price in which it was purchased. This is also correct. But whenever we talk about asset, okay, we include the cost of improvement minus depreciation. Okay. Assets are shown in the books at the price it was purchased plus cost of improvement. Assets are shown in the books at the price it was purchased or market price. This is absolutely wrong. Okay. So at the price at which it was purchased plus cost of improvement minus depreciation. This is given in accounting standard 10 fixed assets. Okay. When we discuss that accounting standards, whenever you discuss, look at it, you will be able to appreciate it better. For now, you can just remember this, guys. Clear? A concept that a business enterprise will not be sold or liquidated. Business will not be sold.
Going concern.
Sir,
Going
option
concern.
A. Going concern.
Going concern. Very good. According to the accrual concept, what does it tell you? Accrual concept. Transaction and events are recorded in the books at the time of their settlement. Is it on settlement in cash? No.
Second option.
Transaction and events are recorded when they are entered. Whenever they are entered. Transaction and event will be recorded at the time of settlement? No. We cannot record at the time of settlement. Whenever the transaction is entered, that is the time when we have to record the transaction. Clear? Clear, guys? According to any doubt in the previous one? Anyone?
Sir, seventh.
Seventh. Which one is correct in seventh one? What is accrual concept? Accrual concept is the transactions are recorded. Do we record the transaction when they are settled or we record the transaction when it gets completed? When do we record the transaction? I have taken a premises on rent. I will record the rent when I pay the rent or when I use the premises for rent. When I will record the transaction.
So when you use the premises for rent.
Yes. So this is what it is telling. Transaction and events are recorded at the time when they are entered into. Clear? Not at the time of settlement. So here they have mentioned at the time of settlement in cash, which is wrong. Here, either at the time of settlement or when they are entered into. This is also wrong. So we'll go with the
So the answer is B, sir.
B. Answer is B. That's why I have put a tick mark. According to the convention of consistency, next one should be
First
accounting.
option.
Yes, should be consistently followed. According to going concern, which option is correct?
Sir, third option.
An indefinite life.
Sir, an indefinite life.
Indefinite life. According to which of the following accounting concept, even the proprietor of a business is treated as a creditor. Proprietor is treated as a creditor.
Business
Internal
entity
liability.
concept. Business
Option
entity
B.
concept.
Business entity concept. According to which of the following concept, in determining the net income from business, all costs which are applicable to the revenue for the period. This wording is enough. Revenue for the period should be
Sir,
matched against
cost
the.
concept.
No.
Matching
Revenue,
concept.
Matching
Revenue-
concept. Matching
revenue,
concept.
revenue and expense should be for the same accounting period. Which concept is that?
Matching concept.
Matching concept, sir.
Matching concept,
Matching
sir.
concept. Anticipate no profit. Which concept?
Prudence and conservatism principle.
Prudence and conservatism. Valuation of stock
Prudence
at
and conservatism.
correct. Valuation of stock at lower or this one, whichever is lower. This you may not be able to tell. It is again because of prudence concept. In the accounting standard of inventory, this topic is discussed. So let's not get into that. Prudence concept tells that whichever is lower, we have to record. Okay. Which of this is not a fundamental? Fundamental accounting assumptions are only 3. Which is not fundamental?
Business entity.
Sir, option
Business
D.
entity,
Business
option D.
entity.
This is fundamental. This is fundamental. This is fundamental. Business entity concept is the right answer. Clear? During the lifetime of an entity, accounting produces financial statement in according with the following concept. Accounting
Sir,
produces
accounting period. Accounting
Ah.
period.
Sir, accounting period.
every accounting period is
12
divided
months.
into 12 months. X Limited follows the return down value method of depreciating machinery year after year. Due to year after year, he is following. Yes, due to consistency.
Consistency.
Asset is accounted at the
Consistent.
price paid and expenses incurred for acquiring the asset. Asset is recorded at price paid. Which accounting concept?
Cost
Cost
concept.
concept.
Concept, sir.
Cost concept. Fantastic, guys. Answer is
Option
cost
B.
concept. Yes. At the end of the accounting period, provision is made for amount of outstanding bill. Outstanding bill provision is made. Which accounting concept?
Full concept.
Which accounting concept?
Accrual concept.
Accrual concept.
Accrual concept. Clear, guys? Next one. Annual fee for a student for next 2 years is 1 lakh. 2 years, 1 lakh was received by the school. What will be the accounting treatment as per revenue recognition? Okay. For 2 years, I have received the fees. Can I record the fees for 2 years in one single year?
No, sir.
Only 1 year's income has to be recorded in 1 year. So how much income I will record? In this year, I will record 50,000. In next year, I will
Option
record.
C.
Option C, sir.
Clear? An entity does not include value of skills. Skills are not recorded. Why?
Because of
Money measurement.
material,
Because of-
money mesh.
Money measurement, not materiality.
Money mesh.
Skill I cannot value in money, right?
Yes, sir.
That is the reason we cannot record it. Writing off of bad debt. Which concept? Bad debt writing off. Bad debt write off. Prudence
Sir,
concept.
option C.
Prudence.
Okay. The next one is little technical. This you don't have a choice but to remember. IASB upon coming into existence has adopted IASC and SIC. This is just a objective question, guys. IASB is International Accounting Standard Board. Okay, there is no concept involved in that. You have to remember only. Ind AS are principle based. Ind AS are previously we had accounting standard. Accounting standard was rule based. Ind AS is principle based. Clear? Okay. Assets may be valued under Ind AS on historical cost. See, this is again a very technical thing. At this moment, we don't have a choice, but we will have to register in mind. I don't want to explain the concept behind it because it's a very high level of concept for you. Okay. Anything on Ind AS is a very high level concept, not required for you to understand. Clear? Next one, accession. Next one, we will take few more MCQs, guys. Accession, you can do it. Competency based question. Come to this competency based question. In order to achieve comparability, it may sometimes be necessary to override the prudence concept. Money measurement concept. Which of the following statement is correct? Is or are correct? Okay. There are 4 statements given, guys. Okay. First one is, which of the following statement about accounting concept is or are correct? In order to achieve comparability, it may sometimes be necessary to override the prudence concept. True or false?
False.
Yeah.
False.
Money measurement concept is that item in accounts which are initially measured at their historical cost. Money measurement concept is that item in accounts which are initially measured at historical cost.
False.
So money measurement concept only tells that everything has to be recorded in terms of money. Okay. Let us take one more thing. Now, which of the following statements about accounting concepts are correct? Prudence is a concept to recognize unrealized profit and not losses. Is this correct, guys? Can we record unrealized profits? No, we cannot record.
No,
This
sir.
is revenues are matched with expenses in according with matching principle. This is correct?
Yes, sir.
Yes, this is correct. The financial statement should disclose all relevant and relevant information in accordance with full disclosure principle. This is also correct. Okay. Question number 6. Accrual. Which will fall in this category? Out of the 4 examples given, which will fall under accrual category?
Third one.
Anyone?
Option 3. Column B, option 3.
Option 3. So,
Sir,
for,
option 3.
yes. Going concern. Going concern.
4th.
Option 4, sir.
Option 4. That is correct.
4.
Matching. That is correct. Yes. Matching.
First one.
First one.
And cost, value of an asset is determined on the basis of acquisition cost. Clear, guys? Any doubt? So these are all very, very basic things that we are discussing. Okay. Now, any doubt so far, guys? Okay. You can go through it.